Shares in German lender Deutsche Bank plunged as much as 8% on Friday as investors fretted that problems at one of Europe's largest financial institutions could spill over into the rest of world markets. Deutsche Bank's stock tumbled amid reports that emerged this week that it might need a government bailout after several major hedge fund investors in the Frankfurt-based company were said to have pulled billions of dollars from the bank because of concerns over its ability to raise capital. Fears over Deutsche's financial health stretch back to the 2008 financial crisis when it was hit with various fines and lawsuits as regulators forced Europe's banking sector to restructure, but they were brought back into the spotlight after the United States Justice Department last week suggested the German lender may need to pay $14 billion to settle several investigations related to mis-sold mortgage securities. Deutsche Bank maintains that it would not need outside help to pay that amount and it has not commented on the alleged withdrawals first reported by Bloomberg. The German government has not signaled it is preparing to offer a bailout. Regional stock markets across the continent moved lower as Deutsche Bank's stock lost value. Germany's DAX index slid 1.6%, Britain's FTSE 100 index fell 1.2% and France's CAC 40 index dropped 1.8%. On Wall Street, a closely watched gauge of market sentiment, the CBO Volatility Index, also known as the Fear Index, rose 15% on Thursday. U.S. stock futures were down 0.2% on Friday. If Deutsche Bank does require a financial rescue package, the first institution it may turn to first is the European Central Bank. The ECB has various tools at its disposal it can use to inject cash into troubled European banks that fall under its jurisdiction. ECB President Mario Draghi disputed claims made on Wednesday by the head of Germany's BDB Banking Association Michael Kemmer that the central bank that oversees lenders in the 19 countries that use the euro currency was partly to blame for Deutsche Bank's problems because of its low-interest rate policies. "No, I don't share this view," Draghi told reporters in Frankfurt on Thursday. German Chancellor Angela Merkel says there will be no state bailout. But this might be a case of famous last words, as the history of banking crises often shows that major banks cannot be allowed to fail for fear of systemic risk affecting the financial system and negatively impacting the real economy, Neil McKinnon, an analyst at VTB Capital, told the Associated Press. Italian banks are also seen as a major threat to Europe's economy. Years of dismal economic growth and bad debts in Italy have left its lenders extremely fragile financially.